What up, traders? What up, investors? Here is Ken, the dyslexic investor, and I just messed up my intro once again, but we're just going to stick with it. So we're going to be looking at, I'm pretty sure you've seen in the news, you've seen it on a lot of articles on different various things, on people saying a V-shaped recovery, a W, a U, and maybe even an L-shaped recovery. And we're just going to be walking through basically four of those scenarios today, looking at the S&P 500 as being the majority staple in the markets, on trying to figure out what these guys are talking about and these ladies about their ABCs here. We'll be discussing what potential price levels. Again, these are just predictions. These are just my opinions. This is just a educational thing to kind of get you better understanding the markets and for you to do your own homework and due diligence to figure out the markets and put money or capital into play. All right, so let's go ahead and get started. So we're going to go with probably the most basic one, which is basically going to fall on the scale of being the most optimistic. And the most optimistic is the V-shaped recovery, meaning that we saw the high up here at the SPY at 339. Basically, that was the end of February, that we would basically come down here. This was the bottom, and then we're just going to V-shape higher. So this doesn't mean that it's just going to bounce around and come back down, but that means it's going to just come straight down. It's going to pivot. Basically, this is going to pivot this low here, and then this means it's going to continue. So in that projection, we can draw some chart lines on that. So let's go ahead and get the charting tools here out so we can go here. We're going to draw the trend line basically like so, that we would follow this line up, and then we would follow this continued trend up to make the V-shaped bottom. So this could be a pretty steep incline. We could see a lot of overhead resistance, but this is very particular about the V-shaped bottom. That doesn't mean it's going to level off and trade sideways for a little bit. It needs to continue going straight up for most, at least to the 200-day, to kind of really clarify that V-shaped bottom, and you'll be able to see that really in strength on the weekly chart. This would be very perfect example of what happened in 2018 into 2019. We had the Fed starting to raise interest rates, kind of came down, made that low on Christmas Eve, and then just made a V-shape up. You did have a little hiccups here and there, but for the most part, it was a pretty smooth ride up, because again, it was a man-made issue. So we probably won't see that here on this, because this is just a whole new ball game with COVID-19 and what's going on here. It's just yeah. I don't know. I'm not on the most optimistic side. I know the markets are going to go up, but I don't know if I'm a V. So V again is going to be the most optimist, going to have the most positive thinking person, and I don't know too many of those investors out there would used to be very optimistic in investing, but I'm just saying a V-shaped recovery is a little bit question. All right, so we did the V. Now we're going to do the W. We're not going to do it in alphabetical order. We're just going to do it in these. And a W is also a very positive, more optimistic thinking, but it's saying at basically this level here that we could have a potential pullback. So what a W shape would look like is, again, just like a W, would come down just like the V here, and then we're to come up to some level, potentially up here somewhere, and then we might not test the lows, but we can get kind of close, and then kind of like make a W like this, and then potentially bounce higher from there. I'm more on the W side of the equation, maybe even a U, but we'll go into that next, on the potentially of coming down here, doing the bounce, making this trend line up here, trading sideways for a little bit, and then maybe a slight pullback. Maybe again, these are just projections. The 250, maybe the 245 level in SPY, and then bounce higher. This is going to be, again, a lot of earnings are coming out the following week, and we could see some surprises. Again, this is a uncharted territory. This is unknown territory. We are going through deep space right now. We have not seen this before, and the books haven't been anything written about this, so it's not really something in modern time that we can compare to. A lot of people are comparing it on the news media, saying, oh, it's like '08, oh, it's like 9/11. Yeah, it's got 10-15% of those different aspects of it, but there's just, we've never really had a full global shutdown like this for pretty extended period of time. So a W, again, let's go look. We can draw some trend lines here. Let me get my pencils out. So we're going to draw this one again from this trend line, basically. But what we're going to look at is the aspect of a potential cutover. So potential, something needs to make this pivot. So we're going to draw basically a box up here showing that a potential, I don't know what's going to happen. Again, this is just projections. Again, just want to be very clear here, that something could downturn. The stimulus checks don't come in time, a increase of unemployment comes in, things like that. This could be the lack of earnings, and just everyone on earnings calls are just waving the white flag, giving up, waving a lot of red flags, not having funneling capital, whatever reason, that it just can create some kind of downside move. Again, we never know what's going to happen. No one has a crystal ball, as this is very true in the markets. But I can see basically hitting the 200-day exponential moving average, and then potentially kind of trading sideways, and then potentially maybe a small little retracement. The reason I say this is because when you do the Fibonacci retracements of this lines up with the 50%, basically the bottom of this box, and then the 618. These are two key points a lot of the times in Fibonacci retracements. We did slightly close above it. Oh, I did not do that 100%. It did not tag the top. There we go. Tag the bottom. Okay. Let's see what this is. Oh, hold on. This closed at 150. It literally closed. So look, this is how crazy this stuff is. You can't make this stuff up. There's some kind of correlation. The Fibonacci retracement is 278.3. The market and the SPY closed at 278.2. All right, so it closed below the 50% retracement. So how crazy is that, right? That's crazy. So potentially we could start the W shape going down, or we can just potentially going higher, maybe push into the 618, and then potentially start going down. But the important thing to look at is going to be looking at this trend line here. So basically, if we gap down on Monday to like 260, 265, and the trend line, the tick closes below the trend line, closes. That's always the key thing. I always follow things on it has to close below it. It can be on it. The whole the stem of the stick can go through it, but if it closes below it, that's a really red sign. So we're looking for something down here, and potentially down here to the recovery at like 245, maybe 240, and then potentially kicking higher. So that is the W case, and I follow the W and maybe even the U case. So the U case is basically we come down here like a U. Again, these are not going to be perfect letters. This is just the technical speaking. Make this little here, but we're going to slowly grind, maybe really trade sideways for a little bit here. Potentially, we could come down lower, but just then slowly come up. It's not going to be nothing and then boom, go higher. We're going to be looking at more of a longer period in these retracement routes down here. So basically this is going to fall back into the initial trend line as well. But that being said, we want to look out at trading sideways for a little bit longer periods. So we would be basically looking at something that trades a lot for the next weeks, even months, just trading sideways. So this kind of falls into the, again, the U or the L. We just kind of come down here and just trade sideways because there's this, again, there's so much unknown. A lot of earnings are coming out. I just did a video on the different various earnings are coming out for the following week. A lot of banks, a couple other bigger companies like Delta's coming out. And we'll just see what they say. A lot of the really important calls on how the stimulus checks and the different various monies from the government is helping them, how the Fed is affecting their balance sheets on buying a lot of the insurance companies and banks really crappy debt ratings, and we'll just see where it goes. Like, you just have to, you got to be ready for everything, because we could just rip higher. If a bunch of banks come out like, hey guys, like, we had 250,000 people apply for different various payroll checks or payroll stimulus package, and they're all going to get their money by the end of the week, and the curve of COVID-19 is slowing down. People are actually listening and not going to the beach. Like, it can be a big, huge combination. We can have the complete V-shaped bottom like we talked about the first one. But looking at, again, the U or the L, again, I'm a little bit, I won't say I'm negative, but this is too much unknown for me in the market. So basically coming down here, and we just trade sideways for a majority period of time, and then maybe slowly grind higher, and basically this trend line would not be able to support that, because that would be supporting more of a V-shaped recovery. So I'm looking at more maybe an angle like this potentially, and just slowly grinding higher and just trading sideways for a couple weeks or months at a time, because there's just so many unknowns in the market, and I think a lot of people are just kind of waiting to seeing what happens. And if you read any of those crazy articles, people are saying like, oh, like the huge hedge funds haven't put their money back in, Warren Buffett's selling all his airline stocks. I think a lot of people are just freeing up capital to see what happens next week, or the next 2 or 3 weeks. If we get some great news on, hey, on May 15th, we're going to lift the stay-at-home shelter-in-place kind of order or law to have you go back into workplace, and then they're going to ramp up the testing and things like that. It's just going to be a lot to look at. It's a crazy time to be in investing. Again, this hasn't been happened in before in their current modern day, but it's super interesting to see what happens and how the human nature is going to come forth. This, again, I'm super long, bullish 5-6 years from now. We've talked about many of my positions long term. If you want to see more of that, please leave a comment down below if you want to know the long-term positions and so forth like that. Again, I just want to ask back to the viewer, so are you a W? Are you a V? Are you an L? Are you more of a U? I just want to kind of get everyone's little perspective, because again, it's kind of a crapshoot, because no one knows. That's the thing. Like, people can go out there, pretend they know something. There are some more factual things. The fact is that no one knows, and you just have to be ready for everything. So what I mean by that is, like, okay, so if you have a V-shaped bottom, so if you have a plan saying, okay, it breaks above the 200 and it continues going higher, the overall momentum is printing higher, the squeeze is kicking higher, the Chaikin money flow is printing higher, you have to look at what's happening, not what your emotions are saying. So I just want to kind of give you the different perspectives of what can happen. I can project what's going to happen. It doesn't mean I'm right. Like, I'm giving more of an emotional opinion, but once it comes to getting on the grindstone, is that I have to take that emotion out and then look at what the chart or what the market and the price is telling me. No matter what, if I think that the whole world's coming in, but the price is going up, that there's just price is going up, that there's just you trade the price, not the news. So that being said, if you have any questions, please leave in the comment section down below. And again, thank you so much for your support. This is Ken from the Dyslexic Investor, and I'll catch you guys on the flip side. Peace.